Look, everyone out there is fighting over AI models, right? But Nebius, they're trying to sell the actual factories that make those models possible in the first place. The real question we've got to answer today is whether investors are looking at the next infrastructure giant or just another company trying to challenge these trillion-dollar cloud empires and failing.
Exactly. It's the ultimate trillion-dollar AI factory debate. I mean, we're looking at a company attempting what is probably the highest risk, most capital-intensive land grab of our entire generation.
They're playing a totally different game than the software guys. They are literally laying down the physical bricks and mortar, well, okay, more like the cooling pipes and GPUs for the entire AI revolution. And get this, they're going straight for the jugular, taking on Amazon, Microsoft, and Google to do it. It's the ultimate scrappy underdog story taking on the biggest titans in tech.
All right, let's hit Section 1, Origins and the Problem. Basically, a story of pure corporate survival.
You know, Nebius didn't just pop out of thin air. They were actually founded way back in 1997 as Yandex, which was effectively the Google of Russia. But then, obviously, the geopolitical landscape completely fractured. So in July 2024, they pull off this incredibly complex maneuver. They divest all their Russian assets for $5.4 billion, completely sever those ties, and practically airlift their top 1,300 tech experts straight to Amsterdam. Yeah, they kept the cash, kept the engineering talent, and held on to this world-class data center they built in Finland. By October 2024, boom, they relist on the NASDAQ as Nebius. Almost overnight, they went from being a regional search giant to a pure-play AI infrastructure powerhouse.
So why does the world even need Nebius when AWS is already everywhere? Well, think of the big hyperscalers, your AWS, your Google Cloud, as massive general stores. They sell absolutely everything to absolutely everyone.
But if you're building massive, complex AI models, you don't want the general store. You want a highly specialized boutique. You need raw, maximum power AI chips, those GPUs, without all that legacy software getting in the way and slowing you down. Nebius is stepping in to provide the exact raw infrastructure that AI builders actually need, without charging them that latency tax you get with legacy clouds.
Let's look at exactly how this crazy transformation is playing out in the real world right now. Pulling up their Q1 2026 earnings report here, and I've got to say, the headline numbers you're seeing are just staggering.
Which brings us to Section 2, Operations and Finances. Time to face the financial reality.
The headline here is totally undeniable. 684% year-over-year revenue growth. They hit $399 million in revenue in just the first quarter of 2026 alone. And what's even more impressive? Their core AI business posted a 45% adjusted EBITDA margin. That means nearly half of their revenue is turning into core operating profit. They are churning out massive cash from the business they're running right now.
But hold on, because here is the incredibly violent financial reality of this sector. Look at their capital expenditures. They're projecting roughly $3.2 billion in total revenue for 2026, right? But they just raised their CapEx guidance to somewhere between $20 and $25 billion. Think about that. They're spending nearly 8 times their revenue just to buy hardware and build data centers.
It's an absolutely astonishing burn rate. It's basically a massive, highly leveraged bet that this AI demand is absolutely not going to slow down.
Right, and management defends this insane cash burn with one vital metric, their forward guidance. They're projecting an annual recurring revenue, or ARR, target of $7 to $9 billion by the end of 2026. Basically, they're spending that $25 billion right now because they truly believe they have the locked-in subscriptions to literally triple their revenue in 12 months.
Okay, moving to Section 3, the ultimate bull case. Let's talk massive growth potential. So the whole bull case really rests on these hard, contracted mega deals. We're talking a $17.4 billion 5-year contract with Microsoft, a $3 billion contract with Meta. These are not handshakes or maybe someday deals. This is locked-in, guaranteed backlog. And honestly, arguably more important than the cash is the power. They've secured over 3.5 gigawatts of contracted power capacity. That includes these massive gigawatt-scale sites in Missouri and Pennsylvania. They even inked a 10-year, $2.6 billion deal with Bloom Energy to use fuel cells to power these sites. Because in the AI era, power is the ultimate physical moat. You can't just invent a gigawatt of electricity out of thin air. You have to physically build it. And Nebius, they have it.
Plus, there's this huge strategic positioning around sovereign AI. You see, European nations and massive global enterprises are downright terrified of being completely dependent on the US Big Three tech monopolies for their AI survival. Nebius, being headquartered over in Amsterdam, provides this perfectly neutral, highly capable European alternative. And that narrative alone is driving serious institutional capital their way.
They're also getting a lot smarter about how they actually make their money. They aren't content just being a landlord renting out NVIDIA chips anymore. They're aggressively moving up the value stack. So they start by renting out the raw compute, then they offer a managed cloud, and now they're actively acquiring software companies to own the inference and orchestration layers. Essentially, that's the software that manages the AI's actual thinking process. It's kind of like building your own highway and then setting up all the toll booths. The higher up that stack they go, the stickier the customer gets, and structurally, those profit margins become vastly superior.
Let's flip the coin. Section 4. Risks and the bear case. What could go wrong?
Well, $8.4 billion. That's what could go wrong. That is their non-current debt as of Q1 2026. It literally doubled in a single quarter. Because, look, you simply cannot build $25 billion worth of infrastructure without borrowing heavily. It's terrifying.
The execution risks here are just immense. First off, customer concentration is severe. I mean, if Microsoft suddenly pivots its AI strategy, Nebius is absolutely devastated. Second, they're entirely at the mercy of NVIDIA's supply chain for hardware. Third, just look at that balance sheet. $1.48 billion in accounts receivable. That tells us customers are getting extended credit, they aren't paying cash up front. And finally, the ultimate boogeyman, AI overcapacity. AWS, Google, Nebius, literally everyone is building right now. So what happens when supply finally catches up with demand? The pricing power just collapses.
Which leaves us staring at this massive existential threat. If AI spending suddenly slows down, Nebius is going to be left holding the bag. Billions of dollars in rapidly depreciating hardware, empty data centers, and an $8.4 billion debt anchor with nowhere near enough cash flow to service it. It is literally a high-wire act without a net.
All right, Section 5, Stock Analysis and Future. Let's price this risk.
Looking at the board today, the stock is currently trading around $259, which gives it a market cap of roughly $58 billion.
Now, if you look at what they're actually making right this second, it looks insanely expensive. But you've got to remember, the market is entirely forward-looking. If Nebius actually hits that $8 billion revenue target, their forward price-to-sales multiple is only about 4.5. And for a company growing this fast, paying 4.5 times next year's sales is actually considered cheap on Wall Street. That's exactly why institutional investors are piling in. They believe the hypergrowth justifies the current price tag.
And there is really no middle ground here. The future scenarios are incredibly binary. In the best-case scenario, they scale up to that 4 gigawatts of power smoothly, their margins expand as they pivot into software, and Nebius essentially becomes the ultimate unassailable AI utility. If that happens, this easily becomes a $100 billion plus stock. But in the worst-case scenario, the AI bubble pops, or maybe Microsoft decides to build its own capacity and rips up those contracts. Nebius turns into a massive hardware graveyard crushed by debt, and the stock plummets right back down to $30.
Okay, Section 6, the final investment verdict. Time to make the call.
The verdict today is buy. We are absolutely not hedging on this one. But let me be crystal clear here. This is a buy only for the retail investor who fully understands highly volatile growth stocks and has the stomach for some pretty severe price swings. We're backing up this buy decision with exactly 3 hard reasons. First, that multi-billion-dollar contracted backlog with Microsoft and Meta fundamentally secures their near-term revenue. We are not talking about speculative demand. This is signed paper. Second, that unmatched physical power moat. You literally cannot fake a gigawatt of electricity. By locking down land and massive power contracts across the US and Europe, they're actively blocking competitors from even entering the arena. And third, their strategic transition up the software stack. By acquiring those key companies, they're making sure they won't just be some commodity hardware renter. They're engineering long-term, structurally superior profitability.
So what's the actual game plan here? What should a rational investor do with NBIS between now and 2030? You buy the dips. This stock is going to swing wildly on macro news and shifts in AI sentiment. You absolutely must monitor their capex to revenue ratio every single quarter to make sure they aren't just building empty factories. And you hold for that eventual transition to profitability.
Exactly. Look, AI infrastructure is rapidly becoming the digital oil of our generation. If you believe that thesis, you really have to ask yourself, do you want to bet on the guys out there trying to strike oil, or do you want to own the company building the biggest refineries on Earth? Nebius is building the refineries.